Keep your finger on the market pulse with the News Alerts tool. Stay up to date on the latest sentiment across all the major asset classes. Uncover bullish or bearish signals tied to specific assets that could be developing before major price moves, and track how news sentiment correlated with price in the past. Track the news volume on an asset, its fear index, and get a better feel for its underlying strength. All with News Alerts, your central hub for market information. That's higher trading from MarketsX.
Boom, and we're live. Good evening, everyone. Good morning, good afternoon, wherever you are, and welcome to the live crypto debate. My name is Andrew, and tonight I have the exquisite pleasure of moderating one of the hottest topics after the US presidential elections, the regulation of cryptocurrencies. Just before we get started, I want to rest assure everyone that anything you hear and see during our live talk shows does not represent investment advice nor a solicitation to buy or sell CFDs or cryptocurrencies. And even if some of us might be qualified in providing investment advice, we won't do that. Only the word investment advice makes me stutter. So please do your own analysis before making any investment decision based on your own personal circumstances. And with this being said, I think now we can start the show. So very good evening, everyone, and welcome once again. After a very hot debate that sparked a lot of controversy worldwide, where initially the US Senate was looking to tax heavily the US crypto users, the US lawmakers have finally reached a compromise in regards to the regulation of cryptocurrencies. Even though some US senators backed up this change, they've all agreed that this is not the perfect solution, but for the moment, it's much better than the previous bill. Now, let's look at some facts that could help us understand the timestamps, the pros and the cons of this bill, and shortly, all my guests for tonight will join us. Here are the facts. There we go. The facts. A few months ago, we saw the ECB president, Christine Lagarde, calling for regulating Bitcoin's funny business, she said back then, as she was worried Bitcoin and cryptocurrencies are used for money laundering purposes and financing terrorism. The Security and Exchange Commission chief, Gary Gensler, said more investor protection is needed on crypto exchanges last week and asked the Senate for more power over cryptocurrencies. Shortly after, we saw the U.S. Treasury Secretary Janet Yellen lobbying against cryptocurrency legislation. We saw the U.S. Senate finally proposing an infrastructure bill seeking to generate $28 billion from crypto brokers, from taxes in the U.S. And finally, the U.S. lawmakers reached a compromise on the infrastructure bill. Now, obviously, we had some pros and cons, and we had some parties more involved than others in this change. Let's have a quick look at the pros and the cons, and then I'm going to welcome the guests for tonight. Pro-crypto lawmakers, including Senators Cynthia Lummis, Ron Wyden, and Pat Toomey, proposed an amendment with significantly less harsh rules. Senator Pat Toomey revealed yesterday that the lawmakers had reached a bipartisan agreement on an amendment to the infrastructure bill backed by himself, Cynthia Lummis, Rob Portman, Ron Wyden, Mark Warner, and Kirsten Sinema. We should thank these people, guys, that they got involved so heavily and they managed to change in the last minute the bill that was supposed to basically condemn everyone in the states that's using cryptocurrencies. The new amendment, again, would exclude the node operators, software developers, and transaction validators from the scope of broker. And meanwhile, tax reporting requirements should only apply to the intermediaries. Jerry Brito, the head of crypto think tank Coin Center, shared some of the text of the modified amendment, showing that the definition of broker will be modified to any person who regularly effectuates transfers of digital assets on behalf of another person. Now, obviously, the infamous Elon Musk lended his voice to the proposed infrastructure bill, saying that there is no need for hasty regulation as the cryptocurrency markets are not going through any crisis. Please remember this statement. Anthony Pompliano, a big crypto player, urged people to call the senators and tell them they want innovation and economic prosperity to stay in the United States. Coinbase CEO Brian Armstrong vehemently kicked against the amendment, describing the vote as of the few key moments that define our future. And in a last-minute amendment, Senators Mark Warner and Rob Portman proposed to exclude only proof-of-work miners and sellers of wallets from the scope of a broker. The Biden administration, no surprise, has reportedly supported the amendment from Warner and Portman. Now, here's the why. Why are we having this conversation tonight, and why the regulation is so important? In this amazing article released by the Motley Fool, which I can't help bringing up every time I have the chance, we see the headline, big headline with capital letters: crypto and investment scams skyrocket in 2020. And by the looks of it, 2021 seems to be much worse. Now, check this out. The key findings of this article are absolutely mind-blowing. 14,079 investment scams were reported to the Financial Trading Commission in the first quarter of 2021, and victims lost $215 million in this quarter alone. People aged 30 to 39 are most likely to be targeted by scammers. The 20 to 29 age group reported the second most cases, and those aged 40 to 69 reported higher losses from very few cases. Just 62% of those targeted by an investment or cryptocurrency scam filed a report with the government. Of those that didn't file a report, 37% said they didn't know they could. 58% of people targeted by an investment scam have since invested, although 75% of those targeted say they're less likely to invest in the future. This is one article that makes us wonder, is the regulation in the cryptocurrency markets necessary or not? Now, check this out. This article was released this morning, guys. Cross-chain decentralized finance protocol Poly Network has suffered a $600 million exploit in what could go down in history as one of the biggest hacks ever. The attack, which is the largest in a string of DeFi exploits, is the largest so far. It has broken the previous $530 million record held by crypto exchange CoinCheck from January 2018. The stolen funds were transferred to addresses on the Ethereum, Binance Smart Chain, and Polygon blockchains. Furthermore, Poly Network's support for blockchain interactivity has made it difficult to assess the full scope of the attack. Now, let's move to another important headline that came out only a couple of weeks ago. Thorchain has been hit by another exploit, this time costing it around $8 million. Thorchain also told the CoinDesk a hacker deployed a custom contract that was able to trick its Bifrost protocol into receiving a deposit of fake assets, and the network then processed a refund of real assets to the hacker. The week before that, the protocol was drained of around 4,000 Ethereum in a separate breach. So Thorchain suffered 2 breaches in less than 2 weeks. And now the final article, guys, and then I'm going to welcome my guest for tonight. Ransomware attacks in which hackers break into private computer systems to encrypt and often steal files to hold for ransom has emerged in 2021 as a major national security issue. In recent months, ransomware gangs have launched several high-profile attacks, including on a major pipeline and a meat supplier, and frequently hampered schools and hospitals. So tonight, guys, with this being said, we're going to try and answer 5 big questions. Is the crypto regulation necessary? Is the crypto regulation urgent? What type of regulation should we have for this asset class? And what happens with the cryptocurrencies after regulation is another question that many people might ask. And finally, the last question: crypto versus CFDs. What's going to happen with the contracts for difference once the regulation in cryptocurrencies comes out? And for this, I have with us tonight Mr. Brad Alexander, CEO at FX Large. Good afternoon, Brad. Good evening. How are you?
Good evening. Good afternoon, Andrew. Lovely to be back. How are you?
It's lovely to have you here. The man with the Hollywood voice.
Here I am.
Right. Now we have also Andrew Sachs at ETX Capital joining us from the heart of London. Andrew,
Hello.
very good evening to you. How are you?
Hello, Andrew. Nice to see you. Thank you for having me here.
Thanks for finding the time to come tonight, Andrew. Right now from South Africa, beautiful people, from the heart of South Africa, from Cape Town, we have Rian Hobson joining us. Good evening, Rian.
Good evening. How are you guys?
Always good, always good. And I'm going to stop here. I have two more guests. I have two surprise guests, which I'm only going to introduce to you in about 15 minutes or so. They're both professionals. They're both specialists in cryptocurrencies, and they're both licensed. So don't miss out, guys. It's going to be an amazing, amazing crypto debate tonight. So, gentlemen, Andrew, I'll get back to you in a couple of minutes. Rian, I'll get back to you in a few minutes as well. Brad Alexander, let's try and answer these burning questions.
Sure.
Is the crypto regulation necessary? What do you think?
In a word, yes, and it's a very complicated business. And we talk about this quite a lot. And I have Bloomberg on all the time when I'm working, and I noticed even yesterday they spent an inordinate amount of time talking about crypto. And here's how new the business is. Very often they don't understand the difference between a new coin and an exchange. I'm not dumping on Bloomberg, but that's how new it is. But you say we should regulate crypto, but don't forget, as you know very well, there's a lot of aspects to crypto. There's new coins, tokens coming out every day. You've got places like El Salvador, as we discussed, who are actually accepting Bitcoin as a currency. So suddenly I always used to say it's not really a currency. Well, it is if you're in El Salvador. And then we've got the CFD question, we've got the exchanges, we've got the wallets. So it's a complicated question, and then triply complicated by the amount of new coins that are coming onto the market. So the answer is absolutely yes, it needs to be regulated, but it needs to be regulated in all these different areas. And again, we discussed something about if countries like El Salvador and others start accepting Bitcoin as currency, then the markets will calm down and regulation will become much, much easier. Just your second
Is the
question.
regulation urgent, Brad? This is the second.
It is, and I'm gonna jump sideways here. And Andrew and you and others will remember the binary options years we went through.
Yes.
And I'm going to make a definite parallel, because you find a lot of regulators or any instruments that we trade as traders or brokers that we offer to our clients can be completely legitimate. I mean, we trade the VIX, which really isn't anything, and it's not something you can take and go buy toothpaste with, but it's something we can trade. We trade oil CFDs and whatnot. Binary options, when they came out, were actually, I believe, a legitimate investment or trading vehicle. The reason that industry died wasn't because of the investment vehicle; it was because of the people who were selling it. And this is my big fear. And you pointed out a very good story about the vast amount of scams. So, good, bad, or indifferent, crypto may be or may not be a great thing to trade or invest in. But there are so many people out there who are really taking advantage of the little old lady with a pension and the student with a student debt and the guy with his new credit card. That's what happened with binary options. And I see the same thing happening with crypto. In fact, the FCA said, we don't want to know. Retail traders can't do it. And one of their complaints was there's no way to fundamentally analyze crypto for the retail trader. I was asked years ago by a student, what's fundamentals about Bitcoin? I said, well, what did Tyler Winklevoss have for breakfast this morning? Now we have Elon Musk who can provide us with fundamentals. So that's
so the regulation is urgent.
Exactly.
What type of regulation, Brad? Something similar to contracts for difference?
Well, again, it depends on where you're looking. Again, if it's a real currency like in El Salvador, it needs to be regulated like a currency, and the banks need to be involved, and the central banks need to be involved if that carries on. And I see that happening. All the Bitcoin millionaires or billionaires wanting to go to El Salvador and buy property, great. Again, a different type of regulation for the exchanges. They are exchanges. They're exchanging, and you can't say physical Bitcoin because there is no such thing.
As physical as it can get.
As physical as we have it, yeah. And they're reasonably regulated, and as long as you don't fall foul of a scam and the myriad new coins that are coming out. And of course, we've got the regulation that you and I live with every day on CFDs and brokers. And what's really important is leverage. I mean, I heard today that offshore you can get 1 to 5 on crypto if you're an offshore. That doesn't sound like much, but if you look at the volatility of some of these things, that's a hell of a lot. Pardon my language. I know SciSec their limit is 1 to 2. So if you're trading with a SciSec broker on Bitcoin or Ethereum, your max is 1 to 2, and that's still a lot. 1 to 5 leverage is quite a bit, and you can blow up your account quite easily with that if you're not paying attention to the volatility of a crypto.
True. However, professional traders and hedge funds, and other big investment firms do use a leverage of 2 to 1, 3 to 1. So this leverage doesn't necessarily mean that traders will be exposed. The problem is 70% of the traders or 50% of the traders, to try and play it fair somehow, don't even get to the real markets. They get scammed, and 70% of them won't invest again. Yep. This is the big problem. They're not spending the money because now we have an abundance of money in the world, right? Because all the governments are printing and printing and printing. Right. Now, if this money will be spent on buying anything else, from a legit shop, people will pay taxes and that money will go back into circulation. Helping businesses, and helping inflation, correct?
Yes, of course.
But what happens when your funds get stolen, most likely sent to some offshore jurisdiction, God knows where, and no one apart from the scammers are using the money. And the scammers can't even launder the money like that because we're talking about billions, being stolen. So that money gets out of circulation and basically no one has access to it. It does not improve anyone's life apart from the scammers.
Exactly.
Now, exactly. The next question I have regarding regulation is this one. What's going to happen with the cryptocurrencies after a regulation comes out?
Well,
are they going to stabilize?
Sorry, go ahead. Sorry.
Are they going to stabilize?
I mean, it depends what they're being used for. If it's a currency, a physical currency, and I'll use El Salvador, and we've talked about this in previous episodes, Andrew, is that it's a chicken and egg. Until Bitcoin, for example, is used as a regular vehicle for purchasing, it won't calm down. But you can't use it as a regular vehicle for purchasing until it calms down. And again, I say El Salvador may be the test case, and other countries may follow. So that regulation will need to be applied as any currency, and hopefully the volatility will come down, and we can use that as a regular currency to buy chocolate bars and toothpaste and cars. Again, what happens in terms of our trading? It'll be the same as anything else that we trade. If the regulations kick in and brokers are above board, which ones that we know, the ones that I work with certainly are, that'll be fine. As you pointed out, the problem is the scammers. In fact, I was talking to a major broker today, actually a client of mine, and he told me we've been cloned, and he showed me the website is identical. And I followed through, and I signed up with a fake account. There were a few spelling mistakes. I didn't give him any money, of course, but it's amazing how quickly somebody could actually fake a professional broker account and make it look like, hey, you can trade euro dollar, you can trade Bitcoin, you can trade whatever. That's a completely different topic than I think regulation. That's down to it's criminal.
Exactly.
That needs to be stopped.
To be honest, sorry to cut you off. To be honest, if I was the regulator, I would put this kind of scam in the same boat with terrorism. Honestly.
Yeah, and Christine Lagarde made a good point. You don't know where that money's going. I mean, it's like a totally different example, but similar example. One of the reasons Canada made marijuana legal was because the underground illegal marketing of marijuana was going to fund a lot of other organized crime. It's not going to stop organized crime, but you can see the logic in what they're doing. Yeah. So, because as you're right, that money's going to other things and not good things, as we can imagine.
Exactly. Now we have one last question, but hold that question for later on, because it's very interesting, and I want to have everyone on the screen while we talk about that topic. Now I'm going to welcome Andrew Sachs to join us. Brad, I'm gonna get you back in a few minutes. Let me see what Andrew Sachs has to say about the regulation of cryptos, and I'll get back to you as soon as possible. Right. Andrew Sachs, everyone at ETX Capital from the heart of London. A very good evening to you, Andrew. How are you?
Hello, Andrew. Hello.
So, I know you heard the chat so far. Thank you for joining us. Now, question. Is the crypto regulation necessary?
Yes, absolutely, without question. And actually, this is an interesting thing. The United States, where's the big news here, really? Because cryptocurrency regulation isn't new. It's been around for a while. What the news is, particularly here, is that it's the United States that's actually looking at it. What senators of the US government. So therefore, what you're looking at is a major financial center, the United States is not only the biggest economy in the free world, it's also home to Wall Street. So you have all the investment banks there. It's also home to, in Chicago, is home to all the futures and derivatives exchanges. So it's a very big, not only a big economy, but it's also home to many financial centers that power the whole world. So that's what the news is, really. The news is that there's been regulations for cryptocurrency around for about 4 or 5 years, which is quite a long time. When you think about cryptocurrency itself only being 12 years old in its real form that we know it now, and so many things have changed in those 12 years. But since some parts of Eastern Europe have been offering cryptocurrency exchange licenses ever since 2018. So
yeah,
and they're
taking it back as fast as they offered them.
Well, that's true. There are some companies out there that have had those licenses for 3 or 4 years, and they're still operating as regulated venues. So that has been certainly, and why I bring that up is because the regulation is necessary from a sustainability point of view. So no industry that produces financial technology or that operates on a technological basis that has an infrastructure, a system of infrastructure that allows transactions or smart contracts, you can see the way this is going now. It's not just going to be people exchanging one for another. It's going to be people renting apartments by using smart contracts. It's going to be companies using supplier agreements using a cryptocurrency venue. So they will go and do their supplier agreement using an Ethereum smart contract, things like that. So you've got it's not just a trading one thing against another. It's a whole potential decentralized ecosystem of all sorts of administrative and financial services via blockchain technology. And that's the real reason why all these companies like Goldman Sachs are investing in it. They're not investing in it to trade Bitcoins. They're investing in it so that they can operate these kind of smart ledger and smart contract systems alongside with Ethereum and use those for their own. You'll probably see companies like Pricewaterhouse and Accenture using it for outsourcing projects very soon. So to create any form of sustainability in any of this type of industry, you have to have a regulatory framework and a fully taxable, fully legal system and framework for the purposes of all of that infrastructure to not only exist as it is now, but to develop and move forward. And anyone who's sensible, who works in that industry, like Brad was talking about those binary options fraudsters earlier, we all remember that years ago. And that's the thing. That was a very different mindset because none of that was technological. There was no infrastructure behind any of it. It was just people stealing from their customers and running away. And that's the thing. So there was no real framework for this. But this is very different. This is an industry where you see whole companies building exchanges and frameworks where you have some of them not only have got licensed venue, but they've got an EMI license, which is an electronic money institution license. So what they are doing is emulating a sort of digital bank by having a venue where you can come into the crypto world with fiat currency, and then you can get yourself onto a crypto venue, which should be regulated, and that's what the US government are trying to aim for here. And then you can go and pay for things using a payment processor, which is crypto orientated, with an EMI license, which is like an electronic money license for e-wallet. So that is the way that not only cryptocurrency companies are going, but the electronic trading industry in general should be going down that avenue. The whole CFD industry should be going down that avenue, because to be able to compete in today's world, you need to be almost like an e-bank, a digital bank. So yes, that's why they're doing it. They're doing it so that it provides a framework. They know it's here to stay. They know it's not going anywhere. They know that the big banks, like the investment banks, are getting to invest in blockchain projects, and they're buying. Some of them are buying up blockchain projects so they can own them and they can run the infrastructure themselves. Without a regulatory structure, without a proper formula for actually going ahead, and it might take some time to fully do it because it's a very complex. You've got all these things like Uniswap and SushiSwap. You've got all these other technological components that are inside there, and then you have the entrepreneurial people like Vitaly Buterin, who is they're busy making Ethereum version 2. So there's
And
all of
Elon
that
Musk,
kind of.
on the other hand.
Sorry?
And Elon Musk, on the other hand.
Well, there you go. Now, he is a maverick and he's a disruptor, and that's why he doesn't agree with the regulation, because he wants to come along and just say whatever he likes on Twitter and do the sorts of thing that the US government want to do away with.
Yeah, we met someone similar like that a few years back. He had a blonde hair or hair wig or something. Right. So the crypto regulation is definitely necessary. Is it urgent from your point of view?
Well, that depends on how you look at it. If you ask the CEO of Binance, he'll probably tell you yes, because now he's in big trouble. Now, they knew what they were doing. They're playing a funny game with this, because they're saying, oh, it's not really on. We're going to have to try and work with all these things. But what they did was they got very big very quickly. And then they knew that there was whether you call it a regulatory arbitrage situation or not, I don't know. But what they did was get very big very quickly, and then go into different places around the world and quickly make hay whilst the sun shines, before anyone like the FCA comes along. They were the first to come along and say, hey, you can't do that here. And they knew that because in November last year, the Financial Conduct Authority in Britain put a stop to all retail cryptocurrency operation. So if you want to operate cryptocurrency in this country, you have to either do it on an institutional basis, or you have to be an e-money provider, or you have to use it as an underlying asset if you're a digital bank or something like that. You can't offer it as a trading instrument. It's illegal. So they knew that. So it's not like they can now turn around and say, ooh. So yes, it depends who you ask. If you say, oh, is it urgent to them, then yes, probably. But if you turn around to Goldman Sachs or someone like that who's a bank, or if you look at some of these regulated cryptocurrency venues, which do exist, they will say, well, not urgent, because we're building our business steadily and slowly along the grounds of having some kind of framework to work along. And then when eventually there are full regulations, we'll just adapt our technology to suit them.
Do you know where I see the real urgency in this case, Andrew? Because we are professionals, yeah, we are people of the industry. We very well know what's happening and what's involved. But from my point of view, I see the regulation as urgent for the average people. Yeah, for that guy that gets scammed by his life savings.
Yeah, that's for sure. From a customer point of view, from a consumer point of view, yes, it is urgent. If you look back, people's memories are very short, aren't they? If you go back to 2012, 2013, you have there the guy who was the owner of Mt. Gox running away through Costa Rica, running away from the police with all his clients' money. And then he says, oh, look, I was hacked. There's no way you were not hacked, but there's no way anyone can prove it. But of course, there was no regulation, so there's no recourse. So what happens is you end up with everyone having lost their money, which then somebody else who has perhaps not the best, is not the most honest of people, will think, oh, that's a good idea. I'll just go up there, take everyone's physical capital off them, and then say that I've got this very, very clever infrastructure and very good blockchain-orientated infrastructure, which I don't have. And then I'll just say, I'll give you a token, I'll give you a fake, an empty IOU, and then I'll just run away and say, oh, look, we were hacked. Now that regulation will stop that, because what you'll end up with is a sort of infrastructure regulation where the regulator will have to, this is where it will have to differ from other things like banks and things that are paper orientated. Those regulations will have to be all about the infrastructure, where a regulator will have to come and inspect what kind of systems are being used by those particular venues and cryptocurrency orientated companies, and then regulate those systems. So therefore, if someone then comes and says, oh, look, I was hacked, and therefore you can't have your money back, they'll come and they'll be able to inspect which component of that system, they'll have to report to the regulator every day, like the electronic trading companies have to. And then they'll say, well, that doesn't plausible, because actually your regulatory reports show that you were able to report those things. So it's all about having some framework for electronic monitoring of systems. That is very important, because then nobody can pull the wool over anyone's eyes, because they can come along and say, look, we've monitored, like MiFID in Europe, then that stands for the Infrastructure Directive, Markets in Financial Infrastructure Directive. It's a whole system for infrastructure, for technological infrastructure for regulated marketplaces. So you need to have a global one for cryptocurrency, because you can't have Europe or America, because it's a global, it's airware, isn't it? It doesn't exist on a physical basis. So you have to have it on some kind of international basis, where you have an infrastructure directive, so that people's who are operating these exchanges and venues and payments providers and smart contract issuers and all of the actual inventors of cryptocurrencies who are developing new ones all the time.
Nakamoto.
Yeah, like the new versions of that. Like there's so many of them now. They're developing new ones all the time. Then they make new versions of them. They will have to submit their blueprint. In my opinion, this is not what they should be doing, is having them submit their blueprints to a regulator who is technologically astute. And then all of that is a blueprint. And then all exchanges and venues should have to stick to how that operates. And then it should all be inspectable by a compliance inspector.
Very well said, and I'm sure we could do a series on this topic. Now, next question, quick, because I have guests waiting. What happens with the cryptocurrencies after regulation, Andrew? Are we going to see them stabilizing and acting more like stocks?
No.
What do you think?
I think we'll see them going exactly as they are now. It's a community-driven. It's very interesting because it can be used as an institutional. There are lots of companies that use cryptocurrency because it's much cheaper for them and much quicker for them to settle their corporate transactions in that and do smart contracts and so forth at the same time. So they can do, for example, where I can see it being a very useful thing is in shipping. Shipping industry is a problem in terms of logistics as well as settling the transactions across borders, and there's huge costs involved in it. Shipping companies complain all the time about that. So when you have them settling in crypto, they can do it immediately with no transfer charges, and it all can be done on a borderless basis. So I can see things like logistics and benefiting from it. They can also write out all of their supplier agreements on Ethereum blockchain-based contracts that are all integral into the transactions they're doing. So I can see there are uses for that on an institutional basis.
That we know. I never disputed that, and no one disputed the use of blockchain technology. Now, I have one more question: crypto versus CFDs. But hold your thoughts on that one. I'll get back to you in a couple of minutes. Let me introduce Rian Hobson. We're gonna have Rian with us for a couple of minutes, and then I'm gonna have the special guest, and then we all gonna be together on the screen. It's gonna be a madness. Right. Thank you, Andrew Sachs. Stay with us for another couple of minutes, and we're gonna continue the chat. Right, ladies and gentlemen, from the heart of South Africa, Rian Hobson at Bull Markets Talk Show. Good evening, Rian. How are you?
Good evening, Andrew. Sorry. Excuse me.
No worries. You should quit smoking, Rian, by the sounds of that. My granddad had that. And you noticed I'm using the past tense. Right. I know you're not a big fan of cryptocurrencies, and that's why I wanted you here tonight, because I want to hear an opinion of someone that's not involved in cryptocurrencies as deep as we are. So we have 4 questions. We have 5 questions, but I'm going to keep the best for last. So based on what you've seen tonight, based on what you know about cryptocurrencies, is the crypto regulation necessary, Rian?
I absolutely agree. It needs to get regulated. Because obviously, as we know now, everything is chaos. Like you have scams everywhere, like especially in South Africa. Look, people are disappearing with money, and it's difficult to quote them or to catch them actually, because if you catch them, under what you're going to prosecute them. So it's basically useless that if it's not regulated, because every time scams can get away, nothing is going to happen, and that's why it is a necessary story to have the cryptocurrencies regulated.
And is it urgent, Rian, considering that millions of dollars are literally being stolen every day from all over the world? Billions of dollars. Is it urgent?
That absolutely is urgent. The only thing is, although we want regulation now, obviously if there was regulation, I would feel comfortable actually also to go into the crypto market. But because it's not regulated, I still have my doubts, and because everybody's complaining about the scams. But my question is, will it actually go under commodities, currencies? Because what I do see, like for example, you have in America, it sounds to me it goes under commodities. Like it's gonna behave, or they're gonna regulate it as a commodity. Europe it's like a currency. In Japan, it's also they accept it as legal tender. In South Africa, I don't know, maybe they're gonna put it as a commodity. Now, if it's like, for example, a commodity, then you have to write regulations which comply with all other commodities. For example, the mining rights that needs to go in. I'm just now thinking of mining and all those things that goes into it. So for me, that is where the difficult question is going to come in, under what asset class is going to fall under. Because then you have to now, the regulation will need to go under that. And obviously, then you have mining, the technology, it's more advanced there. So yes, it is an urgent factor. It needs to get regulated, but how are we going to see it?
The right way. Yeah.
Also
This is my next question. What type of regulation are we expecting? Lynn, you touched upon it a second ago, and it was brilliant. Personally, I see it more like stocks. Yeah, because if we look at it, every coin has a purpose. Every company listed on the stock exchange or unlisted has a purpose. Both stocks and cryptocurrencies tend to move more on fundamentals on the news than on technical analysis. When it comes to currency pairs, you have the central banks. Yeah, you have every country importing and exporting a huge amount of goods every day, which they have to pay for. So they're going to try and balance the exchange rate, yeah, and perform that transaction, if they can, whenever the transaction suits that specific government. Yeah, if it makes sense what I'm saying. So from my point of view, I see this new asset class, which is cryptocurrencies, very similar to stocks. Yeah, they move roughly the same. Most of them tend to move up. Yeah, because the company that sells that coin for its purpose, it tends to develop and grow and do better. Therefore, its value on the crypto exchange will go higher. So these are the questions. Now, what do you reckon is going to happen with the cryptocurrencies after the regulation comes out, in any form of regulation?
That is actually a good thing, because if, for example, like if you have Japan, for example, that see it as legal tender, excuse me, the United States is seeing as commodities, well, every sovereign country has its own decisions based on crypto, or will it be seen as cryptocurrency globally? Because if you say it's going to be like a stock, look, all countries is sovereign countries. So everybody makes his decision on crypto. We're going to see it as commodities or this or like that. So that is what the whole thing is. If it gets now, what happens after crypto, after regulation, then I'm not sure, because it depends on how it's going to get viewed by the sovereign country. And if you look at the trade on a global scale, I don't know how the hell will that work.
Fair point. Fair point. Right. Now, the time has come to invite the first special guest to join us. True specialist in cryptocurrencies. He used to work for the biggest investment banks, has a lot of experience in cryptocurrencies, and he's joining us from Switzerland. Rian, thank you so much. Don't go anywhere. We're gonna come back to you in a few minutes. Ladies, gentlemen, traders, great pleasure to have with us tonight Mr. Chris Thomas, cryptocurrency specialist from the freezing Switzerland. Good afternoon, Chris. Good evening.
It's sunny Switzerland today, and good to see you.
How much did you pay for that?
Well, my tan.
No, for the sun to come out in Switzerland.
It's been like Scotland the last 2 months. I tell you, it's been raining literally every day until 3 days ago. So
oh boy,
I'm now making the most of it.
It's over 42 in Cyprus for weeks and weeks. I can swap with you anytime you want. Now, Chris, I'm sure you heard the conversation so far. I'm going to go straight for the questions because we're going to have some Q&A towards the end, and I have another guest which I have to welcome. So the first question to you is the crypto regulation necessary, Chris?
Absolutely, and that'll be quite short and sweet in most of these. Yeah, absolutely, and it helps us evolve the market. It allows people to have a framework to work by. At the moment, things that perhaps in China might be the standard way of doing things are not acceptable in the West, and vice versa. And so it allows us to start standardizing and just moving towards how the mainstream markets work. And that's a really, really good thing. That allows more retail to come in a safe way. It allows the pension funds to invest in a more confident way. So yeah, it's happening. It's going to happen slowly. The key thing we've got to remember, who's creating the regulations? Essentially, it's government officials. Government officials work in the government because, hey, quite a lot of them cannot get a normal job. They're not, they're not paid as well as their equivalent in a corporation. They've got a more like a kind of a safer environment. And that's, there's a lot of good people there, but there are a lot of people who are sitting, taking it easy. And they're not as good. The better people are getting paid 20, 40, 50% more in the banks. And so you're therefore not allowing us to, where these regulations are being created by people who sometimes don't fully understand. And that's going to make it slower, and it's not going to make it as good.
Very fair point. Very good point. Very good point, Chris. Now, is the crypto regulation urgent from your point of view?
Yeah, the sooner we get it, the sooner stability in the market, less games get played. We can start cleaning up, stopping some whales manipulating or trying to. I'm sure there's always ways around it, but we can certainly try to stop that. And also, as I say, as the pension funds and all the asset managers come in and the real retail money, they're going to come in a safer environment, and that's going to build the market capitalization across the board and allow far better innovation to happen. So yes, whilst there are still scams and all that, the crap that happens, it's getting more positive.
Fingers crossed for that. Now, what type of regulation are we looking for, Chris, for cryptocurrencies? Because you heard me saying earlier on that to me, at least, they're very similar to stocks. They behave similarly. They're driven similarly. What sort of regulation? How do you see this regulation coming out? Good answer.
Yeah, I don't know. I think there's got to be a blended solution somehow, which is allowed, which is free enough to be modified on a regular basis. By that, it may well need modified on an annual basis at very least, as the markets evolve, as the smart contracts evolve, as something else different to a smart contract comes into the markets and so on, as we've seen with NFTs. Look, they've been around for 3 or 4 years, but actually they've really come to prominence in the last 3 months. How do you start monitoring things like that if the new wave of whatever comes in the next 3 to 6 months? So we've got to have a nimble regulation structure. And if that starts as take the best bits of the equity markets and throw in a bit of like commodities or however they want to do it, use that as base 1.0, knowing that 1.1 will be in 6 or 12 months time, and develop it out that way.
Very good point. Very, very good point. But what will happen with the cryptocurrencies after the regulation comes out? Are we still going to see these crazy spikes?
Yes, but less severe. So volatility naturally declines. We still obviously, look at the commodities markets and look at what happens in the big tech markets, the higher beta. So naturally, yes, we will still see these crazy moves, but they'll be less manipulated and there'll be larger players involved. So that's another reason why there's not going to be so dramatic. There'll be more institutional money. So yeah, as I said, the markets will expand, and they'll also, as they expand, they'll go up. The better quality assets will continue to go higher and higher with less volatility.
Right. Okay. That's probably my view as well. The volatility will tamper eventually once the regulation comes out. Now, I have a last question, but again, hold your horse for that one. We're going to get back to you in 2 minutes. Now, I have the second surprise guest, ladies and gentlemen. Chris, thank you so much. I'll be with you in just 2 minutes. So my next surprise guest is joining us from the sunny Cyprus, from the torrid Cyprus, and he's also a cryptocurrency specialist, licensed, and educated cryptocurrency specialist, joining us live from the sunny Cyprus, Socrates Minas. Good evening, Socrates. How are you?
Good evening, Andrew. I'm very well indeed. Thank you very much.
Thank you so much for finding the time to see us tonight. Now, I know I'm not going to say who you are and what you do just yet, because I'm planning a surprise for that. But we do have 5 big questions tonight. And I know you're a man of the industry and you're qualified in what you do. So what do you think about the crypto regulation? Is it necessary from your point of view?
Certainly, and I take on board what both Brad and Alexander were saying. I agree with them, but I think there's 2 areas here, Andrew. There's the regulation of the underlying asset, and the technology providers. So I think where really the regulation is needed the most is with the providers of the assets. So in terms of the exchanges, and really what I'd like to start seeing is more stringent KYC, AML procedures coming into place with some of these exchanges, and really kind of getting to know who their customers are, because right now I don't think they're really doing that. So I think it's extremely important for the exchanges to really step up their game here. But what we don't want to see happen is regulation to stop innovation. And I think this is what could happen in the States, where regulation could actually put a stop to the innovation and people just get up and leaving and say, right, okay, sorry, US, we're going to go and relocate our operations somewhere in the world. We're not going to strictly regulate us. So, yeah, I'm a big believer in regulation and all for it.
Like China did, yeah, when China basically
Absolutely.
banned mining. Yeah, we saw the big Chinese miners relocating to Europe. So probably,
Exactly.
as you said, this is what the Americans will do as well. Not that the rich Americans are not connected to Europe in one way or another. Right. Is the crypto regulation urgent, Socrates, from your point of view?
I think it's urgent, but I don't think it's something that we should rush into too quickly. I do believe it's urgent, but I think it needs to be right. But we shouldn't rush into something. But yes, it is urgent, and we do need something as soon as possible. But we shouldn't rush into it just for the sake to say, we've regulated it now.
Yeah, fair enough. What type of regulation? What are we looking at? How are we gonna classify cryptocurrencies? Yeah, in what asset class are we gonna put them?
Well, look, I think, we need to look at all assets as such, digital assets. And as Brad quite rightly said, there's so many different kind of tokens, different kind of utilities, different kind of use cases. So I think it needs to be taken on an individual basis, an individual merit, depending on what that token is or what it represents. So this is my angle. It really does depend on the particular asset, really.
So you're talking about altcoins, yeah?
Correct. Yeah.
Because you
yeah,
have
indeed.
you have multiple types of coins, and you would categorize them like that, actually?
Yeah, absolutely, Andrew. I do, because they all have different use cases. So we've seen like identity provider platforms, cloud storage platforms with their own kind of tokens and their own utilities. So I think these assets should be treated differently to the other kind of currencies, such as Bitcoin, which is a digital currency.
Right, fair point. Okay. And what do you reckon is going to happen with the cryptocurrencies once a global regulation comes out? Yeah, once something like ESMA happens.
Yeah. Okay, so in the case of your fellow colleague here, Rian, over in South Africa, where he's basically saying to us that he's concerned about joining this industry because it's largely unregulated, and I think the regulation will create a more smoother onboarding or a smoother ramp for the institutional investor to join. And so, yeah, I think we will see, a huge big entry to this space once the regulation is here. I really do, and I think it's what is needed right now. There's lots of skeptics out there not wanting to join this industry because it's unregulated, and I can understand that. But for me, the volatility of this market makes it extremely exciting. And if you can't handle volatility, you shouldn't really be in this space right now.
True. Volatility brings opportunity, and opportunity brings profits. However,
correct.
Another reason why some people might pull back, and I completely agree with them, Bitcoin is simply too expensive for the average person. Yeah, and I know Chris keeps telling me, yes, but you can invest 100 euros or 200 euros a month in Bitcoin. What's the point? I'd rather invest 200 euros in, Dogecoin. Yeah, because it might go up 2,000% or 1,000%, and I'm gonna hit a bull run. But investing 200 euros in Bitcoin, even if Bitcoin moves 10%, 20%, what the hell am I going to do with that? It's just too expensive, too ridiculous.
Yeah.
Right. Now, one last question, and the time has come to bring everyone back on the screen. Okay, because we're all people of the industry, and we started in this industry many years ago when cryptocurrencies were not around. Yeah, and we started trading the good old euro US dollar. Yeah, we started trading crude oil and gold, and that's where some of us made or lost some money. So, Brad Alexander, welcome once again. Good evening. Let's see where Andrew Sachs is. Rian Hobson. Good evening, Rian. Thank you for joining us once again. There's Andrew Sachs. Good evening, Andrew Sachs, once again. And thank you for being with us. And Chris Thomas. Wow, a full house. I love it when I see it like that. I wish you would all be here in my studio, to be honest. Right. The question that I've held back for the last 45 minutes is crypto versus CFDs. What are we doing? Brad Alexander, the stage is yours. I can't hear you, Brad. What's happening with the sound?
Unmute.
You muted
How's
your
that? Is that
microphone.
better? Yeah. You're
Don't
muted.
mute your mic.
Right. Yeah. Well, we live and breathe the CFD world, and you talked about Eurodollar and so forth. And Socrates just mentioned as well, trading, oil and gold and whatnot. I trade oil and gold. I don't physically have gold bars or barrels of oil in my back garden. If I were to trade crypto, I'd be happy to do it as a CFD. A quick point about CFDs, and maybe contradicting what was just said, the average retail trader will run afoul of volatility. Professional traders can take advantage of volatility and really make, as you say, make some money. This is where the problem lies, is that retail traders don't necessarily understand the big volatility, trading 1 to 5 leverage, and accounts get blown up. So B-book brokers love it. And well, they do, and the trader goes somewhere else. But I'm all for anything to be traded with a CFD. But like I say, we trade the VIX, we trade gold without owning it. If you saw the film, which we've all seen, The Big Short, you can make a market for anything. It doesn't have to exist. You can trade it. So I'm all for crypto on CFD, but getting back to the whole point of this discussion, it needs to be regulated, proper leverages. And very quickly, I know I'm running on here, I don't agree with you, Andrew, about looking at the stock market, the equities behaving the same as crypto, because first of all, there's the fundamentals for equities are vastly different than crypto. Even commodities are slightly closer, I think. But let's face it, when Elon Musk pops up and says this about Bitcoin and it goes up, that's all we have. Mm-hmm. And we can use a bit of technical analysis on crypto. But outside of that, fundamentals really are, someone buys it, it goes up, someone sells it, it goes down. And Socrates talked about the whales, and Chris did as well, keeping the whales under control. So the things that drive the market of crypto in CFDs anyway, or the prices, are still very different than oil versus Walmart versus Facebook shares.
Yes, no, I was only talking about stocks, and you know why? You know about Beyond Meat, yeah, the big not meaty distributor. It's a plant-based one. Now, there were talks in 2018 or 2019. Beyond Meat was newly listed on the market, and there were talks that they might partner with KFC and McDonald's. Do you know what happened with the share price? Went through the roof. When the infamous Elon Musk said that Tesla will accept Bitcoin again for whatever reason, what happened to the price? Went through the roof. So from this point of view, I was saying that cryptocurrencies and stocks are very, very similar, Brad. But anyway, thank you so much for your input.
Driving it. Yeah, of course. You're right.
Next victim on my scope, Andrew Sachs from the heart of London. Good evening. Once again, crypto or CFDs? Are we going to do both? Are we going to just migrate to cryptos? What's going to happen next?
I think for the intermediate time frame, they will remain very separate. I think that certainly quite right about you and Brad just discussing that. I think there's a big difference between any form of stock trading and the framework that it works within, and crypto. For example, Elon Musk comes along. He crashed the price of those 5 major cryptocurrencies almost $1 trillion overnight. And that didn't go down $1 trillion because you can't buy an electric car with Bitcoin. It's not because of that. It's because of what he's saying about he positioning himself as an influencer, a self-styled influencer. Stocks and things don't have self-styled influencers. They have the performance of a company and the way that they report their publicly listed, let's say a big pharmaceutical or a big oil company reports its annual earnings, or a bank or something. They've got years and years worth of history to go behind. They look at whether it was better than this year or not. And all their shareholders have meetings about various motions that have to be passed. They've got shareholder responsibility. They can't just do something on a whim. So it's all very, very much a different way of doing things. In this situation with Elon Musk, he comes along, he's not even anything to do with any cryptocurrency at all. So he comes along, just gets on Twitter, says, oh, we're not accepting these for payment of electric cars because of the environmental catastrophe that's impending, which is also completely fabricated. And then immediately down goes the price by $1 trillion. Not because you can't buy a Tesla with it; it's because of the impact that everyone's thinking. Oh, now there's an environmental impact, and it's everything. So then he knew what he was doing. He comes along a few weeks later and says, "Oh, we've spoken to miners, and they fixed their power usage now, so it all goes back up again." Stocks don't behave like that. And the thing is, why I raise that as a point is this: you have a totally different way of building a whole market and infrastructure around stocks and forex and things like that than you do around cryptocurrencies. It's a different operating system altogether. So, for example, you have electronic trading companies, OTC derivatives companies. For the last 30 years, most of the retail electronic derivatives companies around the world have built their business model on zero volatility, no volatility. There's a lot of companies that go, if you look at euro dollar, for example, and the matching engines, if you go to a liquidity provider now, prime brokerage, and you talk about their matching engine and where they get their pricing from, they are doing things on a very narrow margins, very tiny little differences between spreads and things. And they are banking on it that it's going to be 138 for years, and nothing much will happen because these are stable countries that, there isn't much volatility. Whereas with cryptocurrencies, you have to design everything completely differently. It's also operated, and the actual currencies themselves are made by entrepreneurial whiz kids who are looking for the next technological breakthrough all the time. They're not satisfied with inventing one currency, getting it up to a certain point, getting it into the whole infrastructure of the blockchain and all of the proof of concept and proof of works and getting it through all of that. They're not interested in just doing that and say, oh, look, I'm now Mr. Ethereum because I've invented Ethereum. I'm going to sit back now and be the Ethereum issuer, like the Bank of England is the currency issuer of the pound, for example, because in this respect, they're not currencies. They are technological tours de force. They are very, very complex technological tour de force. They are multifaceted. So then what happens is he comes along and designs another one and a new one. They do proof of work. Then they'll get you and everyone else staking and doing the, they'll pay people in the members of the public to stake the new currencies and so forth. So it's a distributed, democratized whole network. You can't have them on the same networks as CFDs. It's not, the two are not compatible. And, 4 years ago, these 3 or 4 B-book electronic trading companies tried to offer Bitcoin CFDs, and they got their fingers burned very, very badly, actually.
Yes, because it was very low. I know what happened. But I was referring to trading them in parallel. Yes, so we cannot bury the CFD markets just because we have a new toy called crypto. I think this was basically the question.
You would have to trade them on a different. It will be a different type of people doing it, and it will be a different system, and they will operate separately. You'll have CFD companies doing CFDs. You'll have, like Brad said, you can trade now CFDs without owning the actual asset. You don't own the underlying. You're just trading on an off-exchange futures product. That is a separate system to trading or operating cryptocurrencies. You'll find that people doing CFDs in cryptocurrency will only be a tiny percentage of the actual usage of cryptocurrencies. They'll be used for all kinds of other things. The CFD trading will be you probably find that if it was me, for example, I'm not, this is not what I do, but let's say I had a choice of this, I would go and use a smart contract to go and let's say you're renting out apartments to students here in London, for example. Up comes August, you have a block of apartments. The students come back in August. You sign them all up for their thing. They're coming from overseas, mainly China and places like that. They sign a smart contract on the blockchain, and then they pay it using cryptocurrency. Then you go and invest that in in
In a
exchanges
CFD
doing.
contract.
You just give a contract, but then what you do is you go and invest the revenues from that in a traditional stock exchange. The two are separate.
Fair enough. Okay, Andrew, thank you so much. Chris
Thank you.
Thomas, crypto versus CFDs. This is the question. Are we going to bury CFDs? Are we going to bury stocks and the good old euro US dollar and focus on cryptos? Or what's going to happen? Or we can do both and probably hedge a bit?
I think the interesting thing is that they're both going to exist for a long, long time. You've got such a large CFD and kind of retail trading community as it is, and Bitcoin and crypto will be on the side. And then I think the interesting point is around tokenization and, how that affects all of the markets. You're now starting to see tokenized shares coming into, like, you can trade tokenized Tesla and some of the other ones through some of the crypto exchanges. I think that might well start, once that gets traction in 2 or 3 years' time, I think that may well start kind of leaking into traditional markets and becoming a more interesting product. And then maybe they can tweak it with a little bit of leverage and start turning it sort of more towards a sort of CFD or a future type product.
So we're definitely not burying the CFDs, yeah? They're still going to be around.
Oh, yeah.
No, still here for, who knows, 10 years, 20 years. They've been, I think, been around for 30 years so far. I think GNI created them in London back in the late 90s.
Right. You made Rian smile because he loves his CFDs. He doesn't want to hear about cryptocurrencies. So you made him smile. I can see a big smile on his face. Right, Rian,
Absolutely.
Is it worth asking you the question, crypto versus CFDs, or we already know?
You already know the answer.
Right.
It will take time, but maybe, obviously, for a new generation to come in, obviously my son, maybe if he turns maybe 20 or so, maybe he will be into crypto.
But if you don't teach him against it, Rian.
I'm your more conservative dad. So I stick to the old guns. You take the chair out for your woman and all of those things. So I'm parallel.
Oh, I do the same. I take the chair out just before she sits down. Guys, to help you understand how much Rian is afraid of cryptocurrencies, if I want to send him on Ethereum right now, he wouldn't get it. He wouldn't have it. He would be like, no, I don't need it. Send me a barrel of oil better. I can sell it. Right, Rian. Okay, thank you for your answer. Right, Socrates. Crypto versus CFDs. What do you reckon? Are CFDs going to disappear?
No, CFDs definitely will not disappear, but I really wouldn't encourage anybody new to this industry to try trading Bitcoins as CFDs. Me personally, I'd rather own my underlying asset, hold it in a very safe and secure place, and maybe sit onto it for 6 months, a year, and hopefully I might make quite a bit of money of it. So that's my take on things. I don't think Bitcoin should be traded as CFDs. I vehemently disagree with Bitcoin being traded as a CFD. It's far too volatile. I think people should be really buying the underlying asset and learn and educate yourselves on this revolutionary technology, which really is changing the way of finance and investing. So I see your point, Maria, that you're scared because of the industry, but I think once you actually see a Bitcoin transaction happen and you see that transfer of value without the need of a third party, you really will start thinking, actually, I need to start taking this seriously. We're now seeing between 100 and 150,000 new Bitcoin wallet addresses being opened every day. So there's a huge potential future for cryptocurrency, I believe.
And CFDs will still be around. Yeah,
absolutely, they still will be. Yeah, of course, they will still be around. They'll still be around. Most definitely, they're not going anywhere. These are financial instruments which have been around for a long time. But me personally, I would rather encourage or buy my assets directly and hold them myself. And
maybe hedge it with some CFD trades, if.
Well, yeah, possibility. Depends on how advanced you are, really, Andrew. It really does depend on in how advanced you are and what your knowledge is like. I wouldn't really recommend that if you're very new to this industry.
No, judging by your trading style, from what I understand, you talk like a hedge fund manager. But anyway, I've seen that in London. I've heard that in London. I was almost one of them. Right. So, gentlemen, can we all agree or not that the regulation in the cryptocurrency markets is necessary? Yes,
Absolutely.
Absolutely. Yeah.
Yeah.
it is urgent. Yeah, to stop this wave of scams. Yeah, that took everyone by surprise. Okay, we know that if the regulation comes out, probably we're going to see the volatility, calming down a bit, but still cryptocurrencies will remain probably in history the most volatile asset class. And we agreed tonight that the CFDs should not disappear or did not disappear. And as Socrates was saying, make sure you know what you're doing, basically, before you get involved in cryptocurrencies.
Andrew, can I make one quick point about CFDs?
Yes, please, man.
Yeah,
Yes, please.
obviously we've got lots of places to buy physical. Well, again, I use the word physical, crypto, Bitcoin, whatever, through the exchanges, through your wallet. But you've also got a myriad retail brokers who, if they want to offer this to their clients, don't have the wherewithal to make an exchange. They have to provide a CFD. It's that simple. And they can get liquidity on these CFDs from lots of different sources at various different leverages. So you will have CFDs forever as long as retail brokers are still there, because unless they have the wherewithal to set up their own exchanges, which most of them aren't going to do, they're going to want to obviously satisfy their clients who are asking for Dogecoin, Bitcoin, Ethereum, and the only way they can provide it right now is in a CFD.
Yes, fair point. Anyone wants to add anything else? Go on. Closing statements. Anyone?
I just would like to raise a point, because you made these big pictures about scams in Bitcoin, Andrew, and you mentioned the Poly network, but I'd just like to let you know that the hacker has already been identified, his IP address, and so yes, I get it. There's scams in the place, but let's not forget Bitcoin is not anonymous; it's pseudonymous, and if hackers out there, they will get caught. I've had presentations with big companies who are doing the whole traceability, and it's incredible actually what these guys can trace on the blockchain these days. So scammers on Bitcoin, on the blockchain, hey guys, you're going to get caught out there. They're going to catch you sooner or later. So I think that's very, very good for the industry, these things.
Yeah. Very well said, Socrates. Right, Chris Thomas, closing statement.
Wow.
Andrew,
I was busy thinking about
stuff like that. If you want, I can get Andrew and you can think about it for a couple of minutes. I know Andrew comes up with stuff like that. He can talk for hours and hours. Right. Andrew Sachs at ETX Capital. Closing statements about the topic tonight.
I think certainly it's very encouraging to see that everyone here who is all of you here are a very long established FX industry and electronic trading experts that have been around a long time. We all used to work together before there was any such thing as cryptocurrencies or these types of digital exchanges. We know we worked on the traditional type of middleware infrastructure in the 90s. So it's quite encouraging to see that you all agree that these are important steps forward, they are urgent, and that it will serve to make some sustainability for the whole framework of cryptocurrency as time goes on. So I think that is the most important thing. What you can glean from that is that companies that are going already bearing that in mind and making their systems and making their exchanges and fiat on-ramps and things that get you into the crypto exchanges based on the potential that there will be regulation at some point, are doing it the right way. The ones who have hastily come in and made hay whilst the sun shines have not done it the right way. The right way is to take your time and build it as though you're building any other financial technology infrastructure from the beginning, from scratch. So I think it's very encouraging that all of you who are all experts in this area have come to the same conclusion, and that's good. So I see potentially the nervousness that used to be around these things. And you remember the days going back 10 years ago, there was guys with bow ties going around places like Argentina where there was capital controls rallying the public and up against the banks and things like that. Those days are gone now, thankfully. It's now a question of building a proper decentralized structure correctly, maybe operating some new e-banks, which will come up, neobanks, that will be challenger banks and so forth. And we can all take our part in that. ETX Capital, recently we acquired a company called Oval, which is a EMI electronic payments company. So our plans are to amalgamate those companies and go more towards becoming a neobank, so to speak. I think that is the way of the future for everybody. So
this, more or less, this is where most trading companies are heading to nowadays. They all want to acquire that license as well. Very well said. Thank you so much, Andrew Sachs. Right, Chris Thomas, closing statement. Pretend you're surprised. Right, Chris Thomas, closing statement about the topic tonight.
Yeah, definitely, Andrew. I think that, obviously we've had a good conversation around regulation. I think it is definitely going to develop, as we all agreed. More and more people are going to come in. Yes, some people will still get caught out. That's part of the development, part of the early innovation. Even in normal mainstream finance, there are still scams. There are still people who don't understand, who get misled, blah, blah, blah. That's just life. We want to obviously minimize that, but we are in an innovative space which is going to explode in the next 3, 4, 5 years. So we've got to do our best to make sure it's as kind of controlled as possible, but at the same time allow this somewhat decentralization to occur at the same time.
Right, very well said. Yes, I agree 100% indeed. Right, the most passionate of us all about cryptocurrencies, Rian Hobson from Cape Town. Right, closing statement, Rian Hobson. Closing statement.
I don't know. With cryptocurrencies, for me, it's just like any other currency. If you go actually with history, like we had tobacco as a currency back in the day, like those days, and gold was backed up by currencies, and all of them were messed up. Tobacco, people plant too much tobacco, the thing got useless. When the gold standard came in, people said, no, we don't have enough money, so they put the gold standard off. There's always someone that's messing up something. So, and I just think, I don't see any difference. It will, at some stage, it will just get messed up. Also, look where we are now. They're printing the hell out of the dollar. So I just think it will all get to another point where someone messing it up. So for now, I think enjoy the cryptocurrency. I think it's definitely a good thing, but I don't see the cancer get removed.
All right, okay. Fair enough. Socrates, closing words, please, and then we're going to wrap it up.
Sure. So as somebody who works for a fully regulated digital asset hedge fund, regulation for me is extremely high on my agenda, I must admit. And in response to Ria down there about the US government printing lots and lots of money, Bitcoin fixes this problem. And this is why and this is why we're all big subscribers to crypto. But in just to wrap up, Andrew, yes, regulation's needed. It's welcomed. It's an extremely exciting space to be in right now, and I'm very, very proud to be in it. I love it.
Right. Okay, gentlemen, thank you ever so much to every single one of you for making this possible tonight. Brad Alexander, thank you ever so much. Andrew Sachs, thank you from the bottom of my heart. Chris Thomas, I love you. Thank you so much. Rian, I'm glad I had you on board. And Socrates, thank you so much for joining us tonight.
You're welcome, guys. Lovely to meet your guests as well. Thank you.
Very nice to see you all.
Yeah.
All the best.
Take care. Cheers. Bye-bye.
Definitely going to do another one again. Have a lovely evening, beautiful people. And I'll see each and every one of you as soon as possible. Right, ladies, gentlemen, traders, this was it for tonight. We had the amazing live debate about the regulation of cryptocurrencies. The questions that we got some answers to tonight were, is the crypto regulation necessary? Is the crypto regulation urgent? What type of regulation are we expecting? What happens with the cryptocurrencies after regulation? And finally, crypto versus CFDs. We all got the answers tonight. I hope you enjoyed the answers, and join us again tomorrow for a new round of market talks and for the opening bell for the US markets open. Until then, remember to trade responsibly, and may all your trades be in the money. Have a good evening, everyone.